Everyone seems to be asking whether 2026 is going to be the year that the housing market rebounds. But the real answer is more uncomfortable than a crash or a boom. Because the market is actually moving. It's just not moving the way that most people think. When people talk about the BC housing market, they typically talk in headlines. Rates are down, sales are rebounding, prices are stagnant. But on the ground, the real estate market in BC is very segmented. What's happening to a detached home on a good street in Coquitlam is very different from what's happening to a pre-sale condo in Surrey Central. Now, going into 2026, BC is coming off of a pretty bad year. We saw 20+ year lows in the number of home sales. And while we're not necessarily seeing record highs of inventory is very, very high in a lot of places, typically 7 or 8 months worth of supply. And it looks like we're entering the 5th year of a market correction, depending on when you kind of put the start point at. Unfortunately, nobody has a crystal ball to, see exactly what's going to happen in the housing market in 2026, but we can make some pretty educated guesses based on data and what has happened in the past and experience. So here are our 10 predictions for the BC housing market in 2026. If these predictions happen to come true, you can thank me later, I guess, and if they don't come true, well, too bad, it's my video and I get to make the predictions. Prediction number 1, we're going to see an increase in sales numbers. Kind of. 2025 was the slowest year on record over the past 2 decades for the number of home sales. So when activity is that low, it doesn't really take much for it to get better from here. So yeah, 2026 is probably going to see more transactions, but that doesn't necessarily mean that there's more demand or that things are getting better. It's just that the bar is so incredibly low right now that raising that bar even a little bit will mean that we've technically gotten better. Prediction number 2 is that prices are going to continue to decline even if sales pick up a little bit. Rising sales don't automatically mean rising prices. BC still has an excess of inventory in the vast majority of markets. And most sellers are frankly anchored to old values that just aren't achievable anymore in today's real estate market that we're in. So that price discovery is happening pretty slowly. And what that means is that most sellers aren't actually willing to accept what the market is willing to pay right now. And it's taking time for those sellers to realize that, hey, we're not up here anymore, we're down here. And this is especially true for homes that aren't move-in ready, turnkey, or end user friendly. Think like really tiny condos or really big fixer-upper type projects. There are tons of condos on the market, and a lot of them unfortunately look basically the same as all the other ones. Prediction number 3, interest rates are going to be no longer the thing that anybody cares about. In 2023 and 2024, interest rates were basically the only thing that anybody talked about in relation to real estate. We're waiting for interest rates to come down was a very, very typical conversation that we were having with buyers. But it turns out that all of those people were lying because interest rates have come down and sales got worse. And just because I feel like I can't put too fine a point on it, sales in 2025 were less than 2023 or 2024 when interest rates were significantly higher. So today, the Bank of Canada overnight lending rate is sitting at 2.25%, and fixed mortgage rates, while they did bounce up and down a little bit due to bond yields, they really didn't end off the year any different than when they started. So real interest rates that people are getting on mortgages right now are typically around like 3.8 up to about 4.1%, plus or minus a little bit. And they were basically at that point throughout 2025. And based on what the Bank of Canada is telling us, it doesn't look like variable rates are going to be dropping anymore. And in fact, they might actually go up a little bit. And depending on what bond yields do, well, who knows? But again, they didn't really move much throughout the trade war for the better part of 2025, so don't think we can assume that 2026 is really going to be any different. So what that all means is that rates, well, seemingly weren't really ever the actual important factor behind people's decision making, and if you're a seller, you shouldn't be waiting for lower interest rates to come and save the day. Prediction number 4, the mortgage renewal wall will quietly put the squeeze on a lot of households. 2026 is a pretty significant year for mortgage renewals. A lot of homeowners in BC locked in rates that were super low through 2021, in the mid 1% range. But now they're going to be renewing closer to 4%. And those people are going to be squeezed with higher payments. About $500 to $600 on average, and that's assuming they have about a $500,000 mortgage. So that means that these people are probably going to be spending less on other things because they're moving all of their extra money to the mortgage fund or paying down the extra payments. And when people have less money to spend, that slows the broader economy, not just necessarily housing. And there are going to be a number of people that are squeezed more than others. Not everybody has flexibility with their income to just go make more money by working overtime or earning more commission or whatever. And they might not be able to adjust their spending elsewhere. So there's going to be a number of people who are put in a position where downsizing is their only real option. And those people are going to be the ones that absolutely need to sell. So they're going to have to be priced quite sharply. Prediction number 5, and this one is a little bit of a gimme. Investors are going to stay on the sidelines. This may be a surprise or it may not be a surprise to you, but the math behind investment properties in BC right now is frankly terrible. Vacancy rates are at multi-decade highs in Metro Vancouver, and rents themselves have actually fallen quite a bit. With immigration growth being negative or at least flat in BC, that isn't likely to change either, because immigration was a big part of what pushed up the demand for rental properties, which then in turn increased rent prices. So right now, unless things change dramatically, there's no real reason for investors to put their money into housing in BC, because they can put their money elsewhere and they'll get better returns. Prediction number 6, and this is building a little bit on the last point about investors, but condos and investor-grade products are going to be hit the hardest. Think like tiny studio apartments or dog crate condos, as they're sometimes called. Most pre-sales as well fit into this, and I'll lump this into the same boat as well, generic condos where there's lots and lots of competition. These kinds of homes are going to be the most negotiable through 2026. So buyers are in a situation where they can really take their pick and they can negotiate very, very aggressively. And not to mention, developers are sitting on roughly 12,000 new unsold condos, most of which aren't on the MLS. So, there's lots and lots of choices for buyers who want to buy condos. Prediction number 7, end user homes, and especially ones that are turnkey, are going to fare much better in 2026 price-wise. Think larger family-friendly condos, townhomes, and detached homes on good streets, near good schools, and that sort of thing. And particularly ones that don't require a lot of renovation, or even better, that have been renovated fairly recently. These kinds of homes are getting a lot of attention from buyers because they look like good value. And they stand out in the crowd, in the sea of overpriced listings that are just sitting. So while prices are going to continue to drop through 2026, these kinds of homes won't be hit as hard just because they're more desirable. Prediction number 8, teardown and land assembly type of homes are going to take a beating. Right now, it is extremely tough to make the numbers work on a new project, be it a small project or a big project. Construction costs haven't fallen. Development costs haven't fallen. So the only thing that's left to adjust is land price. So if you have a home that's a bit of a teardown, or you've been talking to your neighbors about doing a land assembly and you're waiting for that big payout from that developer who's going to swoop in and solve all your problems, you're going to be waiting a really long time. Or you're going to need to adjust your expectations of what your home is worth. And not that anyone feels bad for developers by any means, but a lot of them are struggling big time right now. They're converting their projects to rental projects instead of for sale projects, and they're really struggling to get financing or even making projects work. That's not going to change. So if they're struggling that bad with the properties that they already own, they're probably not going to be looking at acquiring even more properties, especially at elevated prices. Prediction number 9, rents are going to stay pretty competitive for tenants. Like I just mentioned, there's lots of purpose-built rentals that are coming to market. A lot of developers are switching their direction that they're taking with their projects because they're not able to get financing any other way. And on top of that, vacancy rates are up across Metro Vancouver. They were hovering around 3.5% depending on what city you're in. And something that has come back around to the market, landlords are having to offer incentives once again. Things like a month of free rent or free internet or other sorts of things that they have to do to attract new tenants that want to stay long term. So all of these things cap rent growth. And with the policies right now that are limiting immigration, you're not likely to see another spike in rental demand. So with the increased supply of rental buildings and the decreased demand, well, of course, that's going to cap rent growth and likely continue to push rent prices down. Now, a small caveat to this, I firmly believe that there is a floor, a price that rents will get to, but they won't get any lower. And that's because as landlords, if you own a property, there's going to come a time where if rents get too low, it just doesn't make sense for you to actually rent the property out anymore, and you're better off just to sell it. And of course, the new buildings that are coming online are going to be, on the higher end of rents because they're all brand new. So while rents will probably continue to drop a little bit, I don't think it will be overly dramatic. You're not going to see double-digit drops. And finally, prediction number 10. Foreclosures are going to keep going up, though slowly. Foreclosures in BC tend to be a little bit of a lagging indicator. The reason being is that when somebody starts having financial trouble, it's still, a year, maybe 10 months, maybe a little bit longer, before they are actually being foreclosed upon and there's a court-ordered sale in place. But both Greater Vancouver and the Fraser Valley are seeing 10-year highs. You can see by the graph that in both cases there is a very notable increase in foreclosure listings. Now, numbers are still relatively low. It's not like, 25% of the house listings are foreclosures. But the steady increase and the sharp increase is still quite meaningful. And especially with that mortgage renewal wave coming in 2026, you're likely to see this number grow even higher. So, bigger picture here, the BC housing market isn't in a crisis phase. It's in what you could call maybe a cleanup phase. The excess supply that's on the market right now is going to take some time to work its way through and get absorbed by buyers who want to make purchases. And while that's happening, unrealistic sellers need to reevaluate the prices that they're asking for their homes, at least if they actually want to sell anyway. And investor-focused properties just need to reprice altogether because they're probably overpriced, which is probably why they're sitting still on the market. I'm looking at you, Surrey Central. And this is why, and if you've looked at your BC assessment, because they came out a couple of days ago, well, that data is already old because motivated sellers are already transacting below averages. That's what happens in a market that's continuing to go down. But these sellers, the ones that are actually successful, they're successful in selling their homes because they're listening to what the market is telling them. They're not looking at what prices were in the past. So what this means for you, if you're a seller, waiting for rate cuts won't save you. Being realistic about the price that you can actually get for your home will. And on the other hand, if you're a buyer, waiting for the crash to happen to swoop in at just the right time, well, that could end up costing you more money in the long run because nobody can time the market. Nobody knows when the exact bottom of the market is. So 2026, it's going to reward people who are actually realistic about what homes are selling for in BC. And it's going to absolutely punish people who are stuck on 2022 prices, or frankly, even prices from 2023, 2024, or last year. The market is moving. It's just not moving very loudly. Now, if you're part of the Metro Vancouver Housing Collapse Facebook group, you probably disagree with all of the things that I've said, but even if you are, or you're a normal person, put your thoughts in the comments below. I'd love to hear what you think. And then while you're doing that, make sure you click all the buttons that YouTube wants you to click. I'm Angelo with the Atlas Group. That is enough real estate for today. You're welcome.